Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Ted, welcome back to the show.
Jim, thanks for having me back.
The Bank of Canada is ending quantitative easing. Is that going to have any effect on the markets?
Well, maybe it'll have some effect on the housing market in Canada, and I'll let your experts in the housing area that you have on. You have quite a number of really good commentators on the real estate area talk about that. In terms of the the stock markets, capital markets, not directly, but certainly the Bank of Canada did get everyone a bit worried. It got us a bit worried that, is this foreshadowing a tight Fed? And it turned out that the Fed was actually fairly dovish in terms of what it's planning to do here. And, from what I've read, and hat tip here to Barton Options on Twitter, the Fed's tapering, which they've been trumpeting for the past few months, appears that their tapering almost matches, is eclipsed by the tapering of Treasury issuances by the U.S. Treasury. What that means is that, we had this big blast of government spending for COVID relief. That's kind of, despite what you hear about these trillion-dollar packages, which may or may not get passed, the actual amount of treasuries debt being issued by the U.S. government is going down, projected over the next few months. And lo and behold, Jim, what a surprise! The Fed says, we can taper now. So the net effects on capital markets of this U.S. Fed tapering will probably be mixed at worst, and I think that it was probably less hawkish. There was the Fed did less tightening than maybe some people were worried about. So from that perspective, it's probably pretty good for stocks. I don't think it means that stocks are necessarily going to keep going up because of it, but it could have been a lot worse. And what we're seeing on the insider sentiment side in Canada, we've had a really good run here in Canada this year, as those of your listeners who participate in the market broadly would know. The Canadian Insider Index has been the one of the top performing major indexes in North America. Most recently here, as of Fed Day, the November 3rd, it's up 37% year to date, so that's pretty good. That's even better than the NASDAQ, which is up about 25%. So, we've had a good run here in Canada, particularly if you've had exposure to the oil and gas area. But our indicators seem to suggest that may be ready for a consolidation here going into year end. We were thinking that, maybe we could have a nice run. But just based off of kind of our, we haven't written about this yet in any of our reports, so this is our first take here on House Street Radio. Our insider indicators are, for the broad Canadian market, are kind of consistent now with a bit of a topping pattern. That could change. That could change pretty quickly, but that's where we're at right now. Now, a big exception to that is on the venture side. And the venture side, of course, the venture index is not what it used to be because now it's got much more diversified. But we kind of see a bit of a topping pattern in insider buying there, which is it's good. That's a positive sign. But it's kind of a slow topping. Like usually, you would see a big spike in buying on a pullback. But of course, the venture has been a slow kind of grind down for a few months here. Now it's perked up. It's perked up sort of the early fall here. It has perked up. But based off of like looking at our sentiment indicators for the venture market, that kind of late summer bottom may be substantial. Like that could be a very significant point of support. So maybe going here into year end, the junior stocks may outperform the broader market, which could or may not be weighed down by a consolidation in energy. We'll have to see. Energy's had a fantastic run, so maybe we'll get some of the miners, maybe some of the cannabis stocks, some of the crypto stocks. Maybe they will help the venture index have a bit of a run here into year end. Is there any more tax loss selling to come? That one has to think that that's sort of getting towards the late innings. But there'll always be some people who right before the deadline in December decide they're going to sell. So there could be some pressure. But yeah, the insider sentiment in the venture area is a little bit more constructive right now than the broad market.
What's the feeling with the new Trudeau cabinet? We have an environment minister who was a Greenpeace activist who was arrested for climbing the CN Tower. I don't think he's going to be the most sympathetic or even empathetic when it comes to the Canadian oil and gas patch. How's that going to affect investors?
Well, he for good, for better or for worse, he doesn't have a lot to do about the oil, a lot of say over the oil patch. It's still a provincial jurisdiction. Yes, they can bring in emission standards. So, but Jim, look at what they do, not what they say, and don't look. Politicians talk is one thing, action is another, and yes, they're going to say a lot of things to make the environmentalists happy. But, how much will the Trudeau government really do? And, we'll have to see. I think that, if they got really, really, tough, yeah, they could, really pose some problems. But I'd be surprised. We'll see. It's not something that I lose a lot of, concern over. I think the oil and gas stocks are going to be more driven by positioning, how many people, waited too long to get in and are chasing performance, and will probably end up holding the bag here at some point, for a little while anyways. Maybe it's happening now. But fundamentally, right now, I can't get too bearish on the energy sector. Like our indicators are kind of we're in the late innings here of the current rally. It's still in a bullish formation in that insider selling is still suggesting there is momentum in the energy stocks, but it's at the very late stages, and we could be seeing like a top for 2021 may already be in, and you may see energy stocks kind of. I mean, you may not. Like obviously, it can go either way, but our indicators are suggesting yes, there is some momentum left in the stocks. But it's getting long in the tooth, this rally, probably due for, a bit of a correction or a bit of a consolidation. I think that will work its way, based off of our indicators, the broad Canadian market. But overall liquidity conditions are fantastic still. So maybe some of these other names, gold miners, pot stocks, some crypto names that haven't followed the cryptocurrencies, some healthcare stocks, another one, and maybe even utilities, right? You may get all these kind of rallying here based off of liquidity and the fact that they're you'll see some rotation into those names that have underperformed because if the big names that have the big winners have been selling, are start to stall, maybe you'll get some profit taking, right? So we'll have to see. But based off of our indicators, wouldn't surprise me if we see a bit of a rotation from some of the winners into some of the laggards. going into year end.
My source at the New Orleans Investors Show told me that the junior miners are very optimistic. Are you seeing any signs of that?
Well, okay. I'm seeing signs that in that industry there's been some decent insider buying, and especially here in the I'm just checking as we speak, by the way. Before I say it, I want to double check. But look, we've got bullish formations in terms of insider buying in both the specialty mining area, which is like the battery metals and that sort of thing. But that's been in place now for a number of months. But it's still in a very decent bullish trend. So I would say that there's some optimism there, and there's been some similar optimism in the gold space. And I just think that the insiders are more optimistic than the general investing public. That may change, although I think that still you're looking at the more diversified miners as being probably a little bit more exciting. And I say that because the Fed was so dovish, in my view, that it's basically given the green light to these sort of economic-oriented mining plays. So if they had been really hawkish, and the Fed, had come out, and you may get, this is why it's going to be quite an interesting finish to the year end. You may get a few Fed officials that try and talk the market down, not in the stock market, but just sort of inflation expectations down, to try and cool things down without having to actually do anything. We'll have to see. There's a lot of politics that's going on, I think, in the Fed right now as well. But let's just say there are some scares about the economy, then gold, I think, will do better under those situations. If the Fed had been more hawkish, gold would have done better because people would have been worried about a recession. That didn't happen. So, my personal take on this is that you're going to see maybe some of the industrial miners continue to lead gold, but gold has been out of favor, and if we get into a rotation, some institutional money starts thinking, let's position for 2022, where, you're going to have an economic uncertainty. We don't know who the new Fed governor is, whether Jay Powell is going to get reappointed. If people start worrying about the future, then gold will do better. We're not at that point really yet, but it could happen any time. And, I agree with a fellow named Darius Dale, who runs a shop called 42 Macro. He appears on Ink Ultra Money basically every week on the Real Vision Daily Briefing. His take was basically, look, you got to have, it's probably okay for risk assets, but no one particular area necessarily stands out as being the go-to space going here into the year end. So, having a little bit of gold and silver exposure probably makes some sense, just because you don't know. You don't know when those fears are going to come back. Stagflation fears, right now it's like everything's kind of okay because the Fed is not really going to be raising rates very fast. So let's kind of get into those economic stocks. Well, bond yields are down. Well, let's buy some tech stocks. I'm not recommending that. I'm just saying that's kind of some of the narratives that are in the market. And right now, that makes sense to us, sort of have a balanced approach. And and if you missed the oil rally, you're probably going to have an opportunity to pick some of these up, a little cheaper. Some of them may not. Some of them are still have the momentum. It's going to be case by case, I think. But so variety, maybe the spice of life here, and some of the forgotten names of the past few months. You may see some repositioning into there. So that's what we'd be looking for.
Do you have an update on what Inc. insiders are doing right now?
Well, I can tell you what the insiders at Inc. are doing, such as myself and our team. We've mapped out our vision for Inc. 3.0, which is the next generation, we believe, of web services that is currently evolving, thanks initially to, I think, a lot of the technology that was delivered by Ethereum that will allow a complete new user experience, over the next few years in terms of being able to interact with applications on your own terms, as opposed to having to go into a website that is sort of, the current structures of password entry and a little bit more democratic in that sense. So you'll be able to join a website community that you have a say in terms of how the website actually operates. I mean, that's kind of the ultimate vision, I think, of a lot of these Web 3.0 applications and communities. So, we're mapping out a strategy, development strategy. It's in its early stages, and one of our primary focus will be priorities will be to try and bridge the gap between the hard assets and the digital asset world. So we're working on an NFT platform. It's in its early stages. We're keeping our members posted on that. It's got a long way to go, and we're not talking about CryptoKitties, and we're not talking about doing all sorts of funky art on it. But we are building it with a vision to bridge the digital and hard asset world. So we are looking for contributors, particularly software developers who want to be involved with our community and ambassadors. So if you're interested in working with us as a community member, hit me up on Twitter at Ted Dixon, and I'm happy to kind of keep you posted on our developments and the opportunities that are coming up. So it's a really exciting time because if Inc 3.0 moves towards where we want to take it, it's going to be a much more sort of community-oriented version, of our current offerings, which aren't going to change. Like we're not planning on doing anything in terms of replacing the current offerings, because Inc 3.0 is going to take a long time to build out, and it's going to incorporate a lot of new ideas that may be quite different than what we see on our current platform. So it's a really exciting time. We're building initially on the Solana blockchain, and the fantastic thing about the potential for the Solana blockchain, and I'm not recommending that anybody go out and buy any cryptocurrency here, but just in terms of the technology behind it, it's very fast, and it's anybody can build on it. It's just fantastic in terms of the opportunities that are out there, and it's really got us excited. So, so we'll keep everyone at House Street posted as we're able to, and as we make progress. We're in the very early stages. I would say maybe the first batter in the first inning of a long game. So, but we're working on it, and we're hoping people will join us along the way and help build a really great community that helps to bridge the divide between getting gold, silver, and copper out of the ground, and also having people in the digital world, digital investors, a new generation of investors, be able to link value from the ground into the digital world. So it's an exciting time, and it's really got us focused and firing on all cylinders at Inc. So stay tuned.
We'll have more with Ted Dixon right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, what's going on with the Canadian and U.S. dollars?
Well, I think you've got the usual year-end flows, and I think you've got people trying to figure out which central bank is tighter. So it's a bit of a beauty contest, I guess, and I don't think really much is going to happen with the Canadian U.S. dollar. While we have the Fed biased towards the dovish side, the Canadian dollar will have a bit of a tailwind. It's not going to be that strong, but I mean, as an old, putting on my old currency trader hat, my bias here would be to be long the Canadian dollar, but not in it for the big win. I don't think we're in for a big move. And look, if oil prices collapse by not five more bucks, the Canadian dollar will take a hit. It's the way a lot of people think of the Canadian dollar. So that would, between that and normal flows, you may have, the Canadian dollar is not always that strong, right around year end, so you could run into some problems there. But it's not something I worry about a lot, and I don't think it's about to make a big move one way or the other. But year end, maybe year end, there is some risk to the downside for a sharp kind of flow-driven move. People wanting to get U.S. dollars at the year end, so there's always that factor. But beyond that, once you get beyond that, sort of the next 6 months, till the Fed starts talking about hiking rates, I think the Canadian dollar will have a tailwind.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back, and thanks for everybody tuning in.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. You can find him at Ink Research. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.